Morning traders. What a day yesterday. Um, Good morning, Kyle. Great overview as usual. Um, I hope you can see my screen and hear me okay. I don't like talking to myself, although sometimes I do. So anyway, let's see. Let me take you over here. We'll get to the crude and the gold in a little bit, but what I'm going to do, hang on a second, is I'm going to put down here the ES and the NAS for right now, as I'm going over the indices from yesterday. So that was quite the day that we had. Let's kind of take a good look here. Hang on a second. And as you know, these markets, we try to complicate things a little bit too much. This was how the ES traded for almost like, I want to say 10 days, pretty close to it, last week, all the way up to this bull trap that we had, where we kept on trying to test these highs in the ES, right? So we had quite a bit of price overlap there. Hang on a second. Other charts, I'm just working on my other charts for a minute. Okay, so what the market likes to do, of course, is they comes into balance. We get this big sideways balance, and when we break out of balance, we want to make sure that we have conviction and volume, momentum, right? And in this case, we broke out of it to the downside. They tried their hardest. We had about 4 or 5 attempts up here at this swing high, could not take it out. But of course, the NASDAQ did take out, uh, was actually a little bit more on the bearish side. I mean, if we were to look at let's just look at this chart here, right? Look at this price overlap on the dailies. But when we finally broke out of it, it's easier to see on market profile when there's conviction and when we're on our way, right? So we had all these tests here in this push back up, what I like to call the inside pocket, right? Here's the inside pocket, and we kept on testing it. This was pretty much where the market broke out of, and and we had that big move down, right? If you look at the NAS, though, the NAS did not really convince us that we were going to go up and test those highs. In fact, we were way below this pocket. Let me just put this inside pocket here. This is where the NAS was, and this is as high as we could get. So the NAS kind of took us down. Now, as I mentioned before, there's rotation in a lot of these markets, right? The NASDAQ was the one that drove the ES and pretty much pulled us up there, but kind of came a little bit out of favor. I think, the whole AI thing, you know, uh, buy the rumor, sell the fact. We really don't know quite yet how this AI thing will play out as far as profits and everything else. So I think that they were definitely overbought, the NASDAQ. And of course, when the NASDAQ could continue to sell, we broke, right? Having the NASDAQ with the 10 stocks being, combined with a $23 trillion market cap, and also uh, 5 of the top stocks being almost 20% of the weight in the ES, right? So we had that big break. But anyway, I'm not telling you anything you probably don't know. But this is what's going on here. Yesterday was very interesting. Let's open this up here. This is, you know, yesterday's action. This is how it looks on a 30-minute bar chart, right? And then let's also throw this in. This might be helpful to look at. So here's the action from yesterday, right? A lot of the, when the CPI came out, it was basically around here. And if you look at this, right, the move that we had here down, an overextended extreme move to the downside. And I preach this all the time with you guys. Almost always comes back to haunt us, and we have a equal swing to the upside, which if you look at this, pretty much an equal swing. An overreaction to the downside causes an overreaction upside. Being a captain, I like to say everybody goes to the right side of the boat and it looks like it's going to tip, and they run to the left side until they realize the middle is probably the best place to be. I'm wacky today. After a day like yesterday, you can't help it. So when you look at this down move, you can see the spots that you see that have just two 30-minute periods of overlap. On the way down, there were single prints, right? Where did we go to? We went to the bottom of this value area from Friday, the unemployment figure, which, was kind of crazy. We stopped right at the 50% retracement line level from August 5th to really, I think it was the first day of September. Those two came right to the T. We came 50% retracement. And remember that 0405 was a big area. So you could see that was a spike, close, and then we started this, little bit of a bear flag, because if you look at it this way, when we came out of this sideways balance area, right? We came out pretty hard. We came back up, couldn't test the untested PLC here. This PLC didn't get tested, point of control. It started to make lower highs on the US session, right? The red is the US session, right? So we kind of did the same thing here, but we had a little bit of a bear flag instead of sideways, but bear flag. But, of course, when we took it out after the CPI number, it caused a little bit of a panic. But what's interesting, on a move down like that, we look to see, if there's going to be a bottom, if we're going to put in a bottom, we'll have a reversal. We look for signs, right? We look at the levels too, how do they treat them? Like this is a little bit of a spike reject. If you look at it on this volume 30-minute profile, each one of these is a volume 30-minute bar. I want you to look at how high the volume was here, right on the lows. And that was a spike, right? So these trends, or these sell-offs like this, end up being like a climax, volume climax, and they end with a volume climax. And they get everybody out, and everybody thinks, I'm getting short. This is really going to go. And then the music stops, and we close up here, and what happened? We started this extreme rally to the other side. So one side of the boat, we go to the other side of the boat. Now, the next thing you want to, keep an eye on is the trend, right? We started with single time framing, higher highs. You could see here inside this area, we watched the volume candles in a 5-minute, but here's on the 30-minute. That high volume on the red just shows a stair step of higher volume moving the puck higher. Now, where do we go? Not quite to the POC. We haven't tested it yet in the US session, but we did poke above it in the Europe session. Now, we could go either way on the opening. There's room for us to come back and fix some of this structure. We have caves and single prints, and sometimes we go up too fast or come down fast. But this was very much a stair step, right? And that's kind of like how these markets move. They go down fast, elevator down, stair step up. Um, Bull markets and bear markets are completely different as far as the way that we have as far as action goes, right? Or, momentum. Generally, bull markets are, or bull trends, we accumulate, keep accumulating until finally we come into against the brick wall, do a little price overlap, and then we get a markdown, kind of like the whole Wyckoff theory, right? We balance and then we have a reversal, we go up, we mark it up, we balance, and then we mark it down. Not always, but in this case, we'll see. The market's pretty strong, but we want to watch the levels and we want to watch a sign for a turnaround to see if we're going to reverse, come back and fix the structure, right? So my pivot comes in right here at this 55.32. It's below the daily EMA, and it's not asking for too much. And you can see this structure here. That was pretty much right around the high 32.50 from Friday's high, which was the unemployment figure, right? And then you can see where we tried to balance over here. But if we get back below here, we could do a little bit of a cave fill, come back into the value area. Now, yesterday's value area is way down here, all the way down, to the 55.14 levels. So I think we could back down. I'm not saying bearish or bullish. It's just, I think we can have a little bit of a test down. If we fail to take out the overnight highs early, we should probably look to test closer to the pivot or the daily EMA. That wouldn't be asking too much after we had this rally that was over 170 off the lows, right? Pretty crazy. Now, let's just go here and take a look at this, the NASDAQ, right? The NASDAQ looked very much the same in a sense that this is where we broke out from, right? The difference, though, the NASDAQ had a much bigger push down, as we know, right? Where the ES worked along those that pocket high for a good week and a half. And then when the NASDAQ rolled over, they had this bear flag and they came down pretty hard, did a little bit of balancing, trying to balance, and then we came down on this unemployment push, right? But they're a little bit more oversold. They took a bigger hit in percentage, I think, than the ES from the upside breakout to the downside on that last rally. And so here we are. This is going to be interesting to see how far we push down. But these single prints that we have above here kind of attract the market. You can't build a high rise, right, with half the building. You have to construct it solid in order for it not to fall down. So that those type of rallies aren't super sustainable. They need to come and do a little structural work. But will we do it today? Who knows? I think we could push back and come down to the pivot, which for the NASDAQ will also be important. This 19,118 area is where my pivot is on the NASDAQ. All right, so let me readjust these, right? Okay, I just thought I'd show you a little different view. Okay. All right, so give me a second or two. We'll get started and we'll go into this, the gold and the crude, bonds, and EC. I'll be ready for you in a couple minutes.